While stock buybacks are slowing down, ETF sales are hitting record highs again. Exchange-traded funds are now expected to purchase $300 billion worth of equities this year alone, more than 2015 and 2016 combined, according to a new Goldman Sachs report. Goldman says that ETFs own 6% of the stock market at the end of the first quarter, the highest on record, while mutual fund ownership sank to 24% in the same period, the lowest level since 2004. Joining us now is the president of Pacer ETFs, Sean O'Hara. Sean, good to see you. Thanks so much for joining us.
Welcome back. We missed you while you were gone.
Well,
Dagan, great job filling in. Thanks for having us, of course, as always.
This is a subject that is obviously near and dear to my family. My husband is the CEO of Wisdom Tree, which is one of the ETF providers out there. So I've watched this market accumulate and get bigger and bigger because Wisdom Tree as well has seen what you're seeing.
Yeah,
characterize
when we grow up, we would like to be Wisdom Tree one day, right? And we've obviously watched Jonathan in his career, and he's done a terrific job. Well, we were talking a little earlier in the break about this. There's a roughly $3 trillion in ETF assets currently. I think the mutual fund industry, 40 active funds, is $16, $17 trillion. But for the last 4 or 5 years, maybe even 7 years, there's been net redemptions in retail mutual funds, and that money seems to be recycling into exchange-traded funds. And I think that's what's fueling the growth. And I think there's a lot of innovation going on in the business. It's dominated by the big guys. Where we're from in Pennsylvania, we're on the same street as Vanguard, so I like to say we're the second biggest ETF company on our street. They've had a lot of success, obviously, but I think what the market wants is they want fair returns, low cost, tax efficiency if they can get it, and that's what ETFs are offering as an alternative to active funds.
Should an investor take money out of a mutual fund and put it into an ETF? Why would I go for an ETF over a mutual fund? Because it looks like that's where they're taking market share from.
Yeah, so we get all of our business primarily from financial advisors. We believe in the financial advisor and the advice model. But I think the reason that people are moving money today is that there's lower cost, there's a lot more choices. I think the active funds have struggled versus the benchmark, so they're not providing that excess return that people expect. And there's a tax advantage or a tax efficiency built into the exchange-traded funds that I also think is driving it.
Because you can buy them, sell ETFs as individual shares. You better control your own taxes, essentially. But I want to know, in order to keep growing assets, do ETFs really need to get into the defined contribution business, where you would be able to invest in them very easily through a 401k plan?
I think that's probably a big part of the next growth spurt. As you know, with mutual funds, you can buy fractional shares, so they fit very easily into that delivery system.
Right.
With ETFs, you can't buy fractional shares. So there are people who are creating these aggregators to allow ETFs to be available in their 401k plan. On our 401k plan at Pacer, our funds or our ETFs are available. You just need to do a little accounting as the money comes in.
We get hung up on the differences between mutual funds and ETFs, but they're index funds, and it's not some sort of magic that people think that they don't understand ETFs, but they do. They're just tradable index funds, and very cheap.
They're a 40-act mutual fund, right, and they're a registration form with some exemptive relief from the SEC on certain issues, but essentially they're just mutual funds that you can buy and sell during the day.
Right. Sean, when you think of the growth of ETFs over the last decade has aligned with the uptrade of the stock market. It's kind of aligned very well. When you look at kind of your risk parameters, when you see a down market, how do you think ETFs respond versus, other competing security instruments? I think it's going to essentially work the same way as it always does. If the market starts to sell off and you get a little bit of panic, then people are going to panic and sell. Investors, individual investors, and the statistics bear this out, they have the incredible ability to do the wrong thing at the wrong time for the wrong reason. And we've seen studies that say the market's return is X, whereas the average individual investor's return is like 20 or 30% of X. So I don't think that anything different will happen as a result of the proliferance, if you will, of exchange-traded funds. I think it's just another choice for investors, and there's a tremendous amount of innovation going on in the exchange-traded fund world. It's dominated, like I said earlier, by the big guys, but it's not necessarily going to wind up
at that way. Wisdom Tree, as you mentioned earlier, they don't do low-cost indexes. They screen for dividends and earnings and create really interesting products that people like and want. We do certain things in our exchange-traded funds. We do trend following to provide some downside protection, so if people are worried about that, our trend pilot ETFs do that. We screen big indexes down for 100 names instead of, like on the Russell 1000, there's 1,000 stocks in there. Well, we screen it down for the 100 names that we want.
Which are like the growth stories of the Russell.
Yeah.
So what are the ETFs right now that you see the most interest in? Where are people putting the money? And how are you going to evolve as fees keep coming down? You say you're on the same street as Vanguard. Isn't Vanguard driving the prices really low for everybody?
Yeah, there's a Texas death match going on that we're not going to enter, and that is for the big guys: Vanguard, iShares, BlackRock, Schwab. There's a race to zero, if you will, in that marketplace for low-cost beta, and we're not interested in that business because we can't compete because we don't have the scale. But I think to go along with that, there's plenty of room for folks who do things different than just simply provide low-cost beta. And if we can deliver on the returns that we expect we should be able to provide, then I think we'll continue to see growth in ETF assets in addition to. A lot of the flow currently is going into large cap funds at the moment. If you wanted to think about where the money's moving, it seems to be that there's a big move to outside the U.S. in exchange traded funds, to Europe in particular.
But I think that the world is wide open. I think I was the first writer, financial writer covering ETFs.
How long ago was that?
It was a really long time ago. It was before the NASDAQ, the Qs were launched. It was even before the Q.
That was really early on.
Right. And I never thought that it would be this big. I remember when the iShares got launched, and I thought, what the heck are they doing with all these slicing and dicing the market like this? So I think that the world is wide open.
One of the things that strikes me, having watched the development of the mutual fund business, is that there was a plethora of choices. There was just more and more and more until it got to be a dizzying array of choices. I'm seeing ETFs do some of the same things. How are you going to stand out and be unique and superior in terms of the product offerings that you're delivering and the ways and the choices you're offering?
You're right. It's all about product offerings.
And it's all about, you know, how your message is received and how you deliver your message. What we do is we focus on strategy. So when we build an exchange traded fund at Pacer, we focus on a specific outcome. We have two verticals today, the Trend Pilot series and the Cash Cow series. They have two different objectives in mind. If you're a Trend Pilot investor, you want to be in the broad-based market when it's going up and you want some downside protection. In the Cash Cows, what you're trying to do is screen for specific, I say markers because I don't think factor is the right word. We use free cash flow yield. And so the way we will continue to grow and be effective at growing is if we can communicate what we do, but we can't communicate what we do unless there's an end buyer in mind. And what I think the big opportunity is, and it probably has been this way for a while, is those people near or at or in retirement really have all the money right now. And so delivering solutions for what those folks are really dealing with versus just going into a broad-based, low-cost beta ETF that's going to go up and down exactly what the market does, that might not necessarily be the right solution for those folks.
So that's what you said, 401ks.
Yep.
Yeah, I think the solutions are a much better way to go than just more and more choice. That's the mistake the mutual fund industry made, and then they got a lot of Me Too product.
Yeah, well, I don't think we're a Me Too product, and I think we'll try to continue to build out our lineup in the veins that we'll have these verticals to do specific things that solve a client problem.
How's the market feel to you right now, real quick, going into the end of the year where we're waiting on policy coming out of Washington?
Well, we like to talk about the market. We say it soars and it plunges. I mean, I came up the elevator. If the two choices on the buttons were soar and plunge, I probably would have taken the stairs, right? So let's keep in mind that where we are in the market.
What's the market?
Yeah, right. So we're at 16% roughly for the NASDAQ year-to-date, 8% on the S&P year-to-date, 6% on Europe. I don't think it feels like it's tremendously overvalued. I'm a little bit of a contrarian, so if everybody's saying, oh my gosh, we're ready for a correction, I doubt that's the time that will happen. First quarter earnings were pretty good.
Yeah.
We're going to see what happens in the second quarter, and at the end of the day, all the noise will get filtered down to one basic fundamental thing. Are the fundamentals there for stock prices to keep going up or not? So far, year-to-date, they are.
And that's the question we'll keep asking. Sean, good to see you.
Thank you very much.
Thank you so much. Sean O'Hara, Pacer ETFs.